Thank you, sir. How are you doing, Roland?
I'm doing well. I was telling Stefan earlier, though, my wife, I don't do podcasts from my home office too often, and she's arranged to
Okay.
have our HVAC replaced in the basement.
Oh,
We're doing some renos. So, just as a heads up, you might hear some banging and thumping and drilling. It's been going on since 9:30, and I didn't have a chance to get downtown. Our Bay Street office would have been ideal for me to book a meeting room to do it, but it is what it is. So hopefully the audience won't mind some thumping.
No,
it's
not
this
a
thing
problem at
called
all.
life, Roland, so be good with it. It's all part of the journey of life.
Right, so we're at 10:17, so let's get this show on the road. I just want to welcome everybody back to Morning Money Conversations with Stef, Drew, and Ray. Remember to tune in every second Wednesday of the month for our latest episode. Your host for today, I'm Andrew, your go-to insurance and estate advisor, dedicated to helping families and business owners protect their wealth and build a lasting legacy. Stefan, he's an award-winning mortgage broker who offers sharp insight and real-world solutions to home financing. And Ray McMillan, the OG of our group and the founder of the McMillan Group, is a retired mortgage broker turned savvy real estate investor with decades of experience and a no-nonsense approach to wealth building. Today, we're breaking down wealth, health, and legacy. One laugh, one lesson, and one conversation at a time. Today, we are absolutely thrilled to be joined by Roland Mackintosh, District Vice President for the Peel-Halton region at HomeEquity Bank. With 18 years in the mortgage broker channel and ranking in the top 1%, Roland brings unmatched expertise in helping retirees unlock financial freedom through smart home equity solutions. He's really passionate about empowering an overlooked demographic to enhance their lifestyle while continuing to own their homes. Now, off the clock, he's a rock climber, hockey coach, and proud dad of two amazing sons. Welcome, Roland, to our show. We want to thank you for joining us today. Roland, my first question to you is, now you've said that this solution helps an overlooked demographic. For those unfamiliar, how does a reverse mortgage work and who is it really designed for?
Well, thanks for that wonderful introduction, Andrew. Pleasure to be here. Yeah, I've been in the reverse mortgage business for quite some time now. And reverse mortgages, they are often very misunderstood. I mean, the typical question is, what is a reverse mortgage? Why would my mortgage be in reverse? So just so you know, a reverse mortgage, quite simply, is a mortgage that has an option to make payments. You can make payments, but you don't have to. And of course, if you don't make payments, if you choose not to make a payment, the amortization schedule just goes in reverse. And that's where the genius name came up for reverse mortgage. So, the beauty of not making payments is the future home appreciation tends to take care of the equity that's being eroded. So, it's a great product for anyone who's been in the housing market and fortunate enough to, the baby boomer generation bought houses for something like $300,000. Now they're sitting on equity worth over $1 million. But with all the need to buy a house and Canadians put a huge emphasis on owning houses, they may not have saved enough money to retire comfortably. So this is a way to take some of that equity out and to use it to build a retirement lifestyle that's going to suit them. So I think the question on there was, who is this for? This is for anyone over the age of 55 years old that's looking to possibly take some money out of their house to maximize their retirement lifestyle.
Thank you, Roland, for that. That's amazing breakdown, making it simple for Canadians to access equity in their home and improve their retirement lifestyle. Stefan, I'll leave it over to you.
Thank you, Andrew, and thank you for that amazing intro. Roland, just kind of for the audience members, just to start at a very ease into it. So my question is to you is that there's a lot of misconceptions and myths behind the reverse mortgage product for people over 55 in Canada. Can you touch on more on the myths and also the facts behind this product?
For sure. I mean, the most common misconceptions, and I had a banker phone me actually the other day, asking me about a reverse mortgage for her mom. And she said, well, my mom's house is worth $1 million. Why are you only buying it for 400,000? And I said, well, we're not buying the house. We don't own the house. All we're doing is taking a mortgage out on the property, just like any normal regular mortgage. The only difference between a reverse mortgage and the traditional mortgage is you don't have to make payments. So I think I don't know where that misconception happened. I think, the home ownership piece where the bank owns your house, it might have been construed from way back, 100 years ago when the UK first started reverse mortgages. It was a way for a landowner to sell their house to someone and then, of course, stay in there until they die. So that concept may have gotten misconstrued. Another quite common misconception on reverse mortgages is they're very expensive to set up. And you know what? There is some grounds to that in the United States. Not to get into a tariff joke or anything, but reverse mortgages cost upwards of $10,000 to close in the United States. In Canada, they're not that expensive at all. I mean, all in, you're looking at about $2,000 to set up a reverse mortgage, which is quite typical for similar to setting up a traditional mortgage. I mean, you get your house appraised, which is a cost. You need a lawyer to do the title search, registration, all that kind of good stuff. And you need another lawyer to basically provide you with independent legal advice. So again, those costs can all be deducted from the mortgage proceeds, but they're not a big deal. So that myth about reverse mortgages being extremely expensive is just simply not true. People, I guess the last thing and that people worry about is that there won't be any money left over for their children as an inheritance because if you're not making payments, I'm worried about my mortgage loan balance growing every single year. And then, of course, the kids might not have anything. And I always sit down with clients whenever I'm explaining the reverse mortgage and I say, okay, look, let's do some simple math together. Your house is worth $1 million. And then, of course, Mrs. Smith goes, yes, it's worth about $1 million, maybe more, maybe 1.2 million. I go, okay, let's just do the simple math. On $1 million home, if your house is going up with the inflation rate of, say, 3% on average per year, how much is it growing in value? And then Mrs. Smith will, do some calculations. She goes, oh, it's going up by $30,000 a year. I go, great. Now, you've came to us for a reverse mortgage of $400,000. And the interest rate right now is 6%. How much is the interest accumulating per year? What's 6% on 400,000? And of course, we work together and it's about $24,000 a year. And this is where the math comes into play. And we always illustrate this through an Excel spreadsheet for our clients. The loan balance is only going up by 24,000, yet the house is going up by $30,000 to $50,000 per year. So the equity erosion it should not be a concern for anyone. And of course, you as a mortgage broker, Stefan, an award-winning mortgage broker at that, you have the tools from our bank to make this illustration crystal clear for your clients. I had an engineer the other day who was doing a reverse mortgage, and after he did the math, he was just like, "Oh my God, this totally makes sense." There's even if we tried not to leave the kids an inheritance, it would be impossible to do so, simply because the house is appreciating.
Thank you for that that response. I think that clarifies and demystifies, what the reverse mortgage can potentially do for clients. And on my end, I've been a strong advocate for my clients to, just consider it. I don't push it. This is something to be considered as an alternative compared to a traditional mortgage. But I'll let my dad take on the next question.
All right, thanks, Lester. Good morning, Roland. The product has been around now for about 25 years in Canada. I mean, we all remember those commercials with the most recent one, the Kurt Brown, is that correct? The
Kurt
Kurt, of
Browning,
course, if you,
yes,
yeah,
yes. Kurt
yeah,
Browning is one of our spokespersons.
yeah,
We've got
yeah.
Peter Mansbridge
Yeah,
doing it full
Yeah, I remember
time.
Peter Manfred doing them too. Yes, that's correct. Yeah. So you've had
And
some great spokespeople for the product.
yep.
Do you think the product has increased in popularity over the last 20 years? When it first became popular or started gaining prominence in the local mortgage market? Or is it still struggling for its place um, around among our homeowners?
That's a great question. Because sometimes I get clients saying, "Hey, is anyone doing this? Like, am I the only one doing this?" And you know what? Maybe back when we started the company in 1986, before we became a Schedule One bank, yeah, it wasn't a lot of people doing it because it was a relatively new concept in Canada. But Home Equity Bank, I mean, geez, we get over 10,000 phone calls a month alone inquiring about reverse mortgages. That's not to say we get 10,000 applications a month, but we have such a demand, and you know our business model has grown consistently by about 25 to 30% per year. You know, previously before we were owned by the Ontario Teachers Pension Plan, we got bought out just in the last 2 years by them, and you probably realize that the Ontario Teachers Pension Plan, they don't invest in companies that they don't make any huge mistakes, put it that way. And they've been studying our business model for years, and they know that it's just basically the calm before the perfect storm. I'm not certain on the actual market share we have right now, but from what I heard, it's less than 5% in Canada. They're expecting that to double in the next 10 years. And I certainly just by the amount of phone calls we're getting, I see that happening very realistically.
Thank you very much. Just a quick note to our audience. This conversation is with Roland Martin, who is with HomeEquity Bank. He is a VP. And we're talking about the application of the reverse mortgage as part of the retirement planning process for Canadians over the age of 55. If you've got any questions, you've got the option of either coming off mic and asking them to Roland, or you put them in the chat. I mean, Roland has got 2 decades plus experience in this space. He's a wealth of knowledge. I have had the pleasure of working with Roland myself when I was actively licensed in Ontario as a mortgage broker. Stefan, who is my son, he and Roland have a very, very close relationship. Roland has mentored him over the last several years in the space of reverse mortgages. So do not be shy. Ask your questions. We don't get too many executives coming on our actually we had one last month and now this month. So we're bringing you value. So please be free. Please ask your questions. Don't hesitate. All right. Thanks.
I just want to jump in real quickly and Will. And so from when I'm looking at clients who would be possibly fit the model for a reverse mortgage, you said the age requirement was age 55. What other type of requirements are there for somebody who would be interested of a client who is saying, okay, I want to access the money out of my home, want to leave some of it behind for my family? What other kind of things would they have to consider outside of just the age and the cost to set it up?
Well, it's quite simple. If you're over the age of 55, you're going to be approved. Because there's no payments to us, there's no risk on defaulting the way a traditional mortgage loan would happen. So we don't have to look at, you know, too closely at credit or income. Um, so really, if you're 55 and older, you're going to get approved. It's just a matter of how much you're going to get approved for. The older you are, the more you'll have an approval for, and conversely, the younger you are, the less money you'll get approved for. They do that because age factors into it. And one of the nice things about a reverse mortgage is if the housing market, for whatever reason, tanks, which, you know, I don't see that happening. You know, we're talking like a 40 to 50% correction. That's what I mean by tanking. But if that scenario does happen, and if the client at that point sells their home and the reverse mortgage balance is higher than the amount of money that they received from their home sale, we will take that loss. So we're pretty much the only bank in Canada that has that kind of guarantee. So it's very nice for peace of mind for clients who are worried about equity erosion. Now, the likelihood of that happening is very, very low. That's why they're very confident in it and what they do for lending. But just to get back to the original question, if you're 55 and older, you will be approved. And how much you get approved for, that's something that Stefan would be able to qualify any client that's interested in finding out what they approve for.
Awesome, awesome.
Yeah.
So there's no insurance requirement, because a lot of the times in estate planning, we're going to be looking at holistically, do you have any existing debts that need to be paid off? So with the qualifying for the mortgage, they don't need to worry about having to show any insurance in place.
Not insurance from what you're talking about to insure the loan. But on insurance, they will need to have their property insured, just to
Okay.
clarify that. Yeah, so they'll need house insurance, but they won't need mortgage loan insurance.
Got it. Got it.
Yeah, that's a great question. I think I want to dive in more into how the product, the chip reverse mortgage can be utilized, because I think many individuals see it as just maybe doing some debt consolidation. But I think seeing the home equity banks scenarios, a lot of people use them for their children's first down payment for their home, early inheritance, vacations. I just want you to elaborate more on how the product could be utilized beyond just paying off debt, whether it's consumer debt or property taxes.
Well, I think TD Bank came out with a stat saying that first-time home buyers in Canada, probably between 45 and 55% on their estimate, are receiving some sort of financial assistance from a parent or a relative to help them get into their first home. So rather than cashing in investments, taking possibly registered investments that are going to take a huge tax hit, a lot of financial advisors will let their clients know, hey, don't take out $300,000-$400,000 from your registered investment account. Use the equity that's in your house, which is non-taxable, and use that to help your kids buy their first home. So yeah, a gift for down payment, that's a very, very very popular option. Who wouldn't want to have as a parent the means to help their children get a foothold in the Canadian housing market? So other ways that people are using equity, you mentioned vacations. It's interesting because my former CEO, before he retired, he was on a really expensive African lion safari, and he got to chatting with some people that were with him, and he was asking what they were doing for a living. They said, "Well, we're retired, but we use the chip reverse mortgage to fund this incredible vacation. This is what we've been kind of dreaming of doing our whole lives, and it gave us the means to do that." So, hitting a bucket list vacation, it doesn't have to be a very expensive safari. It could be even just traveling more often and doing that when you're healthy. So yeah, traveling, that's again part of that retirement lifestyle. I get homeowners. I know Raymond is a real estate investor now. I get people all the time using the chip reverse mortgage to pick up more houses. And sometimes you'll get a father and son situation where I had one guy who was in Hamilton, and his son basically would turn bungalows that he would be buying into legally conforming duplexes. And he basically got to the point where the bank wasn't comfortable lending him any more money. So he had a very good business model on how to buy and renovate and then rent out the home. I think that's called the Burr strategy. Not to get into technical, I don't want to steal Raymond's thunder in real estate investing, but the point is, his dad basically came in and said, "Look, I've got a $3 million house in Oakville. What's the most you can give me so I can help my son out buy more houses, because he can then fast track his own retirement." And this father-son team, they picked up another 3 houses using the chip reverse mortgage. The nice thing about that is now the father is receiving rental income because they're splitting that. He's getting the future home appreciation of the 3 houses they bought in Hamilton. And our interest, although it's not payable, it's now tax deductible because he's borrowed that money to invest. Speaking of borrowing money to invest, not everyone's a real estate investor. Not everyone has that expertise, but everyone does have a financial advisor at their fingertips who'd be more than happy to take out some money, shift it over from their house over to an investment account that's going to pay them monthly. Andrew, I know you're involved in the insurance business. Sometimes our clients will buy an annuity that'll pay them every single month to supplement their retirement income, and it'll do that for life. So there's all kinds of creative ways that people can use the equity that's been built up in their house, which, by the way, it's amazing to see. Like, I'll give you a quick example of someone in my family who recently did a reverse mortgage. My aunt and uncle, they're in their 90s now. God bless them. They're still mobile and functioning well, but my uncle had a slip and fall, and he's now using a walker to get around the house. So they thought, well, we're 90 years old. Maybe it's time we retrofit and retirement proof our home. So they took out a chip reverse mortgage, and they're doing all kinds of renovations now to make their house safer for them to stay in and to live in, because they don't want to sell their house. They like their neighbors, they like their neighborhood, they like the street they're on. They like the fact they can walk to the stores. So you get a real attachment when you're as you get older. So I think the retirement statistics is the propensity to move as you get older decreases over time. And that's certainly true. I think the Ryerson Institute for Aging came out with a stat saying over 90% of Canadian retirees want to age comfortably in place. And this is the way to do it safely, because you don't want to have to worry about mom and dad or your aunt or uncle having a fall in the house because their stairs aren't safe, or even the walkway. This is what happened to my uncle. He fell on his walkway. Retirement proof, making it safer. It's another utilization of the chip reverse mortgage.
Yeah, that is so true. I
Those
mean,
are great
a lot of
examples.
folks. Yeah. Dr. Vibe is saying this is a really great conversation, great information. Thanks for your comment, Dr. Vibe. We appreciate it. I've got a quick question for you, Roland. Tax implications. That's a twofold question. The first part is, can you put a reverse mortgage on a property that is not your principal residence? That's the first question. And the second question is tied to that. So if there's a capital gains tax paid on real estate at certain points in time when property is transferred or sold, what are the tax implications if one accesses all their equity using the home equity extraction product?
Well, okay, I think there's a twofold question there. First of all, can you place a reverse mortgage on a non-primary residence? You can, but at least our bank wants to have it blanketed on their principal residence plus up to 3 rental properties. You can also do your house plus your cottage. Now, if you're taking a reverse mortgage like the majority of our clients do just on their principal residence, that's non-taxable. So it's just like a mortgage. It's not taxable when you take that money out. In terms of implications for capital gains on rental properties or a cottage or anything complicated, we always recommend, and I know this might sound like a politician's answer, but we always recommend they get professional advice from their accountant or their tax planner, Raymond.
Yeah, that makes sense. Yeah. So you have to blanket the rental against the principal residence.
We would, yeah, because the mortgage, the reverse mortgage, is to say, unlike a traditional loan, it's actually, once it's approved for the lifetime of the client.
Okay.
So we just don't want, and with that said, some of our clients have been with us for over 20 years. Now, we know for a fact that clients who are not living in their houses, it's if they're not taking care of their house, if they're not taking care of the uptick of their house, that would be a risk to our bank, because again, we guarantee when the house is sold that the loan balance will never exceed what's due to us when the property is sold. So, we definitely want to cover our position, minimize our risk by having at least one of the properties that's going to be looked after by the primary residence or
Yeah,
homeowner,
makes
I should
sense.
say. Yeah.
Andrew, you have a question for Roland?
I'm just thinking about how many ways this product can be implemented into people's lives, and I guess just going back to a scenario, common scenario, husband and wife, and they're together. What happens when one passes away? I know there's no payments required, and there could be now, let's just say, do age 55, do both of them have to be age 55? Do both of them have to just explain kind of what happens when one of the partners pass away, and how does it affect the product, if it does at all?
Okay, so yes, both homeowners have to be minimum age of 55 years old.
Hmm.
And if something happens to one homeowner, nothing in our mortgages it doesn't affect anything.
Okay.
I met with some clients many years ago. I think they were Italian, and because the wife brought over this little mug full of espresso, and we were all sitting around drinking espresso. We must have had about six shots of this espresso. By the
Bouncing off
end
the
of it,
walls.
we're all kind of going like this. But yeah, then the story kind of got emotional because the husband asked that same question, and he kind of got teary-eyed. He said, "What's going to happen to my wife when I die?" And he was very, very, and that's when the kind of, the joviality we got very real. And I said, listen, if something were to happen to you, the mortgage is not due. It's only due when your wife sells the house or when she passes away. And that was a really, really heartwarming moment for him, because you could see he was basically planning for his wife. And it's often or not enough where you always have one person in the household planning financial, it traditionally was the male's person's job to plan and take care of finances, which was true in this case. I know that's just shifting, and for anyone that's on this call that's female, um, that wasn't meant to be sexist. It was just in the majority of our cases, it was the male who was taking care of and looking after the finances. But whoever is, male, female, doesn't matter. It's only due when at the death of the last survivor or when the home is sold.
Okay, that's great, because I can think of a lot of scenarios where, like you mentioned, single parent homes, mothers, in fact. A lot of my clients are single parents, and they obviously may not have somebody in their late years and may need to use this product. So is there anything that you can mention when they pass away, how that house is treated to the next generation?
Okay, so basically, when the home is sold, and whoever sells it, whether it's the surviving widow that sells it, or if she passes away or he passes away, and the estate sells the house, that's the only time the mortgage is due. And that's no different than any other mortgage. So let's just say both homeowners died and the estate now is selling the house. All they would do is basically request a payout from us, statement. They'd pay us off, and all the remaining proceeds of the sale would go to the estate as per the will of the homeowner,
Got it.
just like any other mortgage. So, whether you had a mortgage at the Royal Bank or TD, if the homeowner dies, they'd request a payout statement from the Royal Bank or TD Bank. Same thing with us. They get a payout statement from HomeEquity Bank, and away we go.
Real quickly on that, is it just one time that they can dip into the mortgage at whatever age they decide to do it, or could they do it multiple times if more money is needed?
That's a great question. Yeah, and we get clients refinancing all the time. As I stated before, we lend more as you get older. So as a client gets older and as their house goes up in value, they might come back and say, "Hey, Stefan, I'm now 75, for example, and my house has gone up in value by 200,000. Can I refinance the loan and get some more money?" And the simple answer is yes, of course you can.
Awesome.
Yeah, I could attest to that because I did have a clients that one of the spouses passed away, and the only thing that had to be changed was the home insurance. They still remain in the home till this day. Um, my next question, but I actually want you to kind of get into more of a storytelling because what you just mentioned with the Italian couple, I remember I attended a seminar and you mentioned one time you went to I think a client, HomeEquity Bank, and you saw their, I don't know, I'm sure you can correct me on this. You've seen their cupboards filled with canned foods. Um, I know, as we know, the economy is kind of going through a rough patch. Do you still see people over 55 and over still financially struggling? And how does that push forward the reverse mortgage product?
Yeah, you know what? It is not easy being on a fixed income, and if you don't have a lot saved, or if you're not fortunate enough to have a pension, it's very difficult when you see cost of food going up, cost of gasoline going up, property tax bill goes up. Every single year, your heat, hydro, electricity bill goes up. So you're on that fixed income. It becomes very scary. And some of our clients, they're making sacrifices up until they do the reverse mortgage where it's just not good. The client you're referring to, he basically, this is many years ago when I met him, but he went through a divorce and his wife moved overseas, but he had to take out a traditional loan, traditional mortgage to pay her half of the house out. It was called a spousal buyout, and he did that, and he wanted to stay in the house, but the mortgage payments that he was making based on the income that he was having on a monthly basis, he was underwater every single month pretty much, and he had racked up some credit card debt. He did show me he was not eating for the last 3 days of the month until his pension check came in. And I said to him, well, why don't you just sell this house? Like, you don't have to stay in it. You don't have to make these payments to the bank you're dealing with. And he didn't want to sell the house. And he was afraid that, he'd be looked down upon by his wife, who is no longer even in the picture, as a failure. So there must have been some conversations about that, because he was determined to stay in his house and stay put. And, we did that mortgage application. We had that fast tracked and funded within a week, just to get him some money to basically stop eating, or stop not eating, I guess, every 3 days. I mean, he was eating canned soup, and it wasn't good. The story does have a happy ending, though. I did afterwards, once the deal was closed, and we gave him something like $400,000, paid off his mortgage, paid off all his credit card debt. He no longer has a monthly payment, and he was in a great financial situation. And I asked him afterwards, I said, listen, what are you going to do now? And he goes, Roland, the first thing I'm going to do right now is I'm going to go out and get myself a steak dinner. And he was smiling from ear to ear. He was probably one of the happiest persons I've ever met at that point. But you go from dread and apprehension on how am I going to do this? And I'm just eating soup every last 3 days of every month, worrying paycheck to paycheck. You go from there to all of a sudden you're in a position of joy. You're in a position where finances is not worrying. You're not worrying about finance, and that's a great. I always wonder how many Canadians are retired that are worrying, really worried about finances. If you're retired, you shouldn't. If you're a homeowner that's retired, you shouldn't worry about finance. They definitely need to check into options.
Yeah, I totally agree with that. And I think that's why we're having this conversation today, and educate individuals about the reverse mortgage and how it can benefit, your retirement lifestyle. So that was wonderful.
Yeah, it was. I mean, there's a large amount of people over the age of 65. You hear the term house rich, cash poor. People are sitting on tremendous amounts of equity. But you're correct, they can't afford to maintain their homes. They can't afford to heat their homes, and they're not eating properly. A few years ago, we did a food collection at Christmas time, through one of our professional associates. He's actually a home inspector. And when he told me the kind of people who they drop stuff off to, I was totally shocked. And they're all homeowners, people who own their homes. They weren't like people living in, some of the worst parts of Toronto. But I've got a quick question for you, Roland. Home maintenance. During the conversation, we spoke about people struggling with income, and then we spoke about home maintenance. So as people age, they tend to have less and less ability to properly maintain their homes. How does HomeEquity Bank protect their interest in the real estate, to make sure that the property is properly being maintained, so that the structural integrity, once the mortgagees pass away, the mortgagors pass away, sorry, that the property is not totally dilapidated? Do you inspect the property on occasion? Like how do you protect your interests?
You're going to hear that background noise, which I apologize for.
That's all right.
But
good.
no, we don't do home inspections after the mortgage is funded. We will do what's sometimes called a full appraisal, where, as part of the application process, we'll have a house appraised. They'll do an inspection. At that time, if we notice things that might need fixing up, for example, I just had a mortgage broker submit an application where the basement was full of mold and there was water leakage happening. So in that scenario, we said, hey, you're still approved. Don't worry, we're still going to approve you, but we do want to get a quote from a contractor on fixing the water leaking into the basement. How much is that going to cost? How much is it going to cost to get rid of the mold and make it good again? Now, the applicant in this case was going to do that anyways. That's part of what they were using the money for. So no issue there. No one wants to live in a basement that's leaking and full of mold. But the contractor came back and said it's going to cost about $6,000 to get this fixed up nicely. So we said, fine, we'll definitely do that. So as part of the mortgage, I think they were qualified for 350,000. We held back the $6,000, and once that contractor has completed his work, we'll release that and we can pay him out of the proceeds.
That is good to know. Been a good conversation. You shared a lot of insight. I think there's so much confusion. Like I remember when I first started mentioning reverse mortgages to clients back in the early 2000s. Everybody was scared. Even some of the advisors I worked with, they were reluctant to refer them to their clients. And now I see Stefan has a different experience. He's got repeat reverse mortgage clients where the same client, has access equity from their home, from their home quite a few times. So I guess it's fair to say that you are seeing a significant uptick in that space. Can you speak to what the trends have been over the last 10 years in that mortgage space, and where do you see the product going in the future? Do you see it as a significant part of the retirement planning process for Canadians now going forward?
Yeah, 100%. I mean, my background's in financial planning as well. And when I did my courses, way back in the days, is going back a decade ago, there was literally a paragraph about reverse mortgages in the volumes of materials I was going through. So financial advisors, to your point, Raymond, they weren't recommending it, they weren't endorsing it because of two things. One, they didn't know anything about it. And two, they weren't getting paid to learn about it and to look into this as an option for their client. Sadly, financial advisors get paid commission on the financial products they sell. They don't get paid on selling reverse mortgages, so there's really no need for them to look at it. Now, this is going back in the day when I first started working in the bank. That's all changed now. HomeEquity Bank has partnerships with every single bank in Canada. We have a team of business development officers going out and actively talking to the branches, talking to the managers, talking to the financial advisors about our products and how we can build that into their clients' retirement plans. So I'm really pleased at how that's going because the last thing you want is again, that going back to that story about the person who was divorced and not eating. He's doing that because he didn't know the options he had. So if we can educate, the more people we can educate about reverse mortgages, whether that's through financial advisors, whether that's through insurance advisors, even real estate professionals like yourself, Raymond, mortgage brokers, our mortgage broker education pieces come along in a huge way. In fact, mortgage brokers account for about half of our business right now. So the more education you can do on reverse mortgages, the more options our retired Canadians are going to have, and the better and more profound retirement lifestyle they're going to lead.
Yeah, we've got to let them know that they're not going to lose their home. And the upside is you can spend 3 months in an African lion safari if your home is worth significant money. Who doesn't want to do that? You've got about 5 minutes left, so I'm not sure if you have any questions from our audience, any comments. We got a couple of comments from Dr. Y, but please do not hesitate to ask any questions. Roland Mackintosh is a VP with HomeEquity Bank. They specialize in reverse mortgages. They're one of the first to really do it really well in the Canadian landscape. He's got 2 decades of experience in that space. And as I said, Stefan works closely with him. We're trying to bring his medication on products that are not your traditional financial products that everybody speaks about, and to remove some of the mystique behind them and some of the myths. So you've got that you can make proper and the right financial decisions. Not too sure if my co-hosts have any other questions, but if they don't, I've got one last question, and then I'll leave it to Andrew and Stefan. How many of the inquiries come from actually that was a question here. He has, how much time do you spend educating? Do you spend more time educating rather than selling?
Yes, I saw that question come in from Dr. Vibe. Yeah, my role has changed significantly over the years. I used to get in front of clients and sign them up and take their application, much like Stefan does for a mortgage broker. But now my role is really just to educate. And my goal, my passion is really to try to get the word out, again, so people have options in their retirement so they can age in place and do so without worrying about finance.
Okay, I've got a quick question, and I'll leave it to Stefan and Andrew. How many times do you have children of elderly parents inquiring about the reverse mortgage product so that they can change their parents' lifestyle and possibly also change their own lifestyle?
That's a loaded question, Raymond, simply because, you're talking about the education piece. We can't educate everybody. And it's basically, you get a phone call from your mom. Hey, Roland, I'm going to get a reverse mortgage. Wait a second, Mom. I'll be right there. But if you phone me and said, hey, Roland, I'm going to get a line of credit, or I'm going to cash in $400,000 worth of my investments. Okay, Mom, that's your, it's your business. You can do what you want. So kids sometimes, I shouldn't say kids because they're adults like myself. They might misconstrue, and they just basically, as an advisor or a mortgage broker, you need to basically educate the children as well as mom and dad, because if the family is tight knit and it's close, it could become a family decision. So you want to keep that in mind when you're talking to clients, because the last thing you want to do is basically have a plan in place for someone to make their retirement lifestyle better, to have it just basically derailed by someone who doesn't know about the products, and they're worrying about equity erosion, or they're worrying about we're going to take over their house. Again, these myths that we talked about in the beginning of the conversation that simply aren't true. So my advice, when you're working with a family, ask them if they have, a son or daughter that wants to jump on the call with you, and educate them as well.
Right, thank you, sir.
Absolutely. Absolutely. I think we're coming to a close now. Any questions from the audience before we wrap it up this episode? Okay. That's today's episode. Thank you for tuning into the Morning Money Conversation with Stef Drew and Ray. I would like to thank Roland Mackintosh for his time at HomeEquity Bank. I hope you guys find this conversation insightful and inspiring. I'm going to drop our social media links so you can keep on top of what's going on with our conversations, so you can keep in touch with our next month's conversation in June 11th, relocation and retirement, making it work, by yours truly, Ray McMillan. And I truly appreciate you guys coming today and spending time with us and listening to Roland share some insightful information about the reverse mortgage product.
Thank you very much, everybody. I see Steph has dropped the links in our chat. So thanks a lot, Roland. It's been fun and informative, very, very insightful.
It's
Great
been a pleasure,
conversation.
and thank you,
Roland.
guys. Yeah, thanks, Andrew. Thank you, Stefan, and thank you, Raymond. It's been a lot of fun, and thank you for helping me in the mission to educate our Canadian retirees.
Absolutely.
Anytime.
Thank you, Roland.
All right. Thank you very much.